What's up, guys? Mike Dolce here. Today we're talking about money, your money, and turning your money into $1.4 million. Do you want to be a millionaire? Do you want to be a millionaire before you're 50 years old? Do you want to be a millionaire before you're 50 years old and not even have to work to do it? Do you want to make over $1 million without putting any time or any work into making this money? And let me share a little secret with you. You have all the opportunity in the world right now to become a millionaire and generate over $1 million in liquid assets if you just do this one simple thing. Now, before I get to that, I want to remind you to subscribe to this channel, give these videos a thumbs up, and always leave comments and questions below. I'm happy to answer them for you. But we want to be rich. We want to have money to do whatever we want with whoever we want, wherever we want. That's really the point of having money, ladies and gentlemen. The point of having money is opportunity. The opportunity to live the life you deserve, to live life on your terms. And as we get older, this is even more important. Look around at your parents. Look around at your neighbors. Look around at family members that you know who are over 50 years old, 60 years old, 70 years old, and they're struggling. They have to work. Now, you don't want to be in the position ever that you have to work. You want to be in the position that you want to work. You want to do the things that you're doing, but you can do them whenever you want, wherever you want, with whomever you want. And that's what money can do for you. And this is what I want to teach you right now: how to generate over $1 million in liquid assets that will continue to grow for you without you doing any work. Now, let's back up a little bit. Many of you have heard about investing and investment strategies, and there are many different strategies out there. I will say that I am not an investment professional. I am not a certified public accountant. I am just a guy who has used this information very successfully in my own life, and I want to share this information with you. How do I get to drive around in my brand new Jeep, bought for cash, on a Monday morning at 9 a.m. when the rest of the world is at their jobs, and I'm just trying to figure out what I'm gonna do for you here on YouTube? This is the type of freedom that I want to share with you, and it's so much easier than it sounds. Now, for this specific video, we are talking about investing. We are talking about investing in the stock market, but we're talking about conservative investments. And when I say conservative investments, I mean we are protecting our principal. Our principal is our own money. The money we walk in with and plunk down, that is our principal, and that is what we want to protect. Now, the money that I put down, I don't want to lose a single penny of that money. I want my money to always stay there, always be available, but I want my money to go to work for me. And this, in my opinion, is the most successful way for your money to stay safe while earning for you. What is this? This is investing in the stock market. More specifically, this is investing in the top 500 most successful companies in the United States. This is called the S&P 500. The S&P 500 consists of the top 500 most successful companies in the United States. You are investing in all 500 of these companies. Along with this investment, you will see tremendous growth. Or I should say, we have seen tremendous growth. The S&P 500 has yielded a 12% return over the last 30 years. Think about that. You can earn 12% on your money as long as the S&P 500 continues to do for the next 30 years what it has done for the last 30 years. Now, past trends are not indicative of future trends, but in my opinion, we have a very good track record that we can bet on moving forward. Remember, we're betting on the top 500 companies in the United States, and these 500 companies grow. We're talking Amazon, we're talking Microsoft, we're talking Disney, we're talking Tesla, we're talking all of the big ones. All the big ones. You open your cabinets, you open your cupboards, you go outside and hop in your vehicle. Likely every single one of these products was created by the companies that I invest in inside the S&P 500. Now, inside the S&P 500, there's many different ways to do it. My preferred investment of choice is an index fund, an S&P 500 index fund. Now, the S&P 500 index fund is a very low cost investment structure. What does that mean? That means it basically costs nothing. I mean, 0.0 something percent of your total portfolio, your total fund actually goes into the management. We're talking about, I mean, pennies, single digit, low single digit penny percentages on the single dollar with these investments. Somewhere around 0.03 to 0.07 would be the average that I would recommend. Now, me personally, I'm invested in a few of these S&P 500 index funds, the most prominent of which in my own portfolio is through Vanguard. This is not an endorsement of Vanguard. This is just one of the funds I find to be easiest to invest in, has the lowest expense ratio, and has one of the longest, most reputable track records. Now, my S&P 500 index fund is invested inside of retirement vehicles, such as my 401k. And if you are working at a company, you need to find out if your company offers a 401k. If your company offers a 401k, you need to find out if your company also offers a Roth 401k. I am almost completely invested in a Roth 401k. I have a little bit in a traditional 401k prior to our own conversion here, because I own my own company, so we made sure that we set up traditional and Roth 401ks. I initially set up in a traditional 401k. It helped with some taxation purposes, but corporate taxation, I should say, that's beside the point. That could be in a completely different video. Those business owners out there, you know what I'm talking about. But the vast majority of my investments are in my Roth 401k. I also have traditional IRAs, and I also have traditional funds. I've invested heavily in the S&P 500 in nearly every possible investment vehicle I have that utilizes the stock market. There's not a lot of reason to invest outside these mutual funds, nor is there a lot of reason to invest outside of the S&P 500. In my opinion, when protecting capital, protecting principal is the key. Remember, guys and gals, this is all my opinion, completely my opinion, and I urge you to do your own research on everything I'm discussing right now. Now, for those of you who have stayed to this point, I'm going to break down the dollars for you. If you invest $100 per week, $100 per week, that does not sound like a lot of money if you're 20 years old or you're 50 years old, because if you invest $100 at a 12% annualized return over 30 years between 20 years old and 50 years old, you will have $1.4 million waiting for you. $1.4 million waiting for you by the time you turn 50 if you simply start this at 20. And guess what, 20-year-olds? You're gonna blow that money on weed and pizza anyway. You might as well put it into an S&P 500 index fund, let it grow to be $1.4 million by the time you turn 50, which is likely younger than your parents are right now. Could you imagine if your mom and dad had an extra $1.5 million just sitting there in the bank waiting for them? How much cooler would they be as parents? How much happier would they be in their life? How many more things could they do for and with their family? And guess what? That $1.4 million will double will double in 7 years. So before you turn 60, you'll be sitting on nearly $3 million. The average retirement age in the United States is 65. That will likely double again by the time you're ready to retire at 65, due to the eighth wonder of the world, says Albert Einstein, of compounding interest. And guys and gals listening, please listen to your Uncle Mike here. Go sit down with your certified tax professional, with your certified financial planner, with your wealth manager, and at the very least get on the internet and do your own research on an S&P 500 index fund. That is exactly what I did. That is what I tell all of my mentoring clients to do, is to invest in your retirement, invest in a fund, an index fund that invests in the top tier companies in the United States. Essentially, you are betting on the American economy, and if we look back over the last 100 years, we see how well the economy has done. Now, when it comes down to people get worried, Dolce, what about the market crash? I am not nervous about the market crash, because you know what that means? That means I get to keep buying at massive discounts. The market crash is like a Black Friday sale. I will buy even more shares of the S&P 500 index fund during any sort of market crash or market correction or recession, because you're getting the same beautiful value at a much lower, much steeper cost. That is my personal perspective, and it has worked extremely well for me. Remember, I'm the guy driving around right now with nothing to do other than talk to you on a Monday morning when the rest of the world is at work. Think about that for a minute. And I'm not even close to being 50 years old yet. Think about that for a minute. You want to live that life? You want to be financially free? You want to have the ability to do whatever you want, wherever you want, with whomever you want? Well, you need to start doing things that nobody else does. And none of your peers likely do this. They don't think about this. Most people don't think about retirement and investing until they're already over the age of 35, until they're into the 40s or maybe even 50s, when they're looking down the barrel of retirement. That's when they realize, oh no, I should start investing. If you start this in your 20s, you will be vastly, vastly, vastly more wealthy than anyone at your current stage of life. Vastly more wealthy than your parents and their parents and their friends and their peers. That's what we're trying to do. We're trying to get you financially free here, guys and gals. I hope this video was useful. I hope you enjoyed this information. It's real, it's honest, and this is just your friendly Uncle Mike sharing this information with you. Until next time, boom.